estate investors tune in for the latest news.
Welcome to another episode of Deeds in the Desert. I'm your host, Izzy Urizari. With me today, Greg Yang, Business Development Executive here at Ignite Funding. Thanks for joining us today, Greg.
Oh, always a pleasure.
Let's just jump right into it. So, another event, right? Another event recap. I love these episodes of the Back in the Office. I like the chance for us to converse a little bit about these events and really talk to our listeners out there, because I never realized how many people are like serial event attenders. And I think everybody's always looking for a good event, and we judge them based on different things. So I want to go over the entire scope of this specific event. So let's jump right into it. So the event, Alternative Asset Summit, held in Phoenix, Arizona, with Matt Sorensen. For those that don't know him, go check him out. He is one of the best-selling authors for a self-directed IRA book, among all these other things. He's a big connoisseur of all these businesses, but we'll jump into that later. Again,
And the
Matt
lawyer
Sorensen.
on the side.
Yeah, lawyer on the side. Go check out all those things. But yeah, again, check him out, Matt Sorensen. We'll put some information at the bottom for this specific podcast. But again, Alternative Asset Summit. So everything alternative. So anything that's outside the stock market. So you're not talking about stocks, bonds, and mutual funds. You're talking about all the really cool stuff, if you want to say. It was a 2-day event, right? So let's just jump right into it. You got there, you got all the booth all set up and everything. So let's go right into what were people looking for at this event? Why do people attend Alternative Asset Summit?
Primarily, first of all, to get out of traditional investing, what the big custodians do, stocks, bonds, mutual funds, SEC governed type of investments. They're looking for real estate investments. They're looking for oil and gas investments, things that, you know, might have higher yields, more regular yields, and also the protection of real estate like we offer. I think what's interesting this time around is that we made ourselves more known as short-term investments in a room of 3, 5, and 10-year investments. All alternatives, all great deals, but none quite as short as what we do. And I think that's the key takeaway that I'd like to, throw in the bucket for this time around.
So a lot of like funds, REITs, things of that nature, falling into the 3-year, 5-year, you said, markets.
And not even real estate related. I mean, there are a lot of these oil and gas companies. Our usual guys were there. And, even all real estate related things that you're owning, properties that, haven't started construction, or things that you're speculating on the performance of.
Were those minimums similar to what we see with us?
No, they never are.
Okay. What were some of the minimums you were seeing there?
50 and 100, also always very common, 50 and 100.
And for our listeners that don't know what our minimum is, what's our minimum compared to those?
Well, it's a nice, friendly $10,000.
Okay.
I think what's important about those companies at 50 and 100, they also had different rates for different hold times.
Interesting.
And that's
so variable offerings. Okay.
Variable offerings, and when you're sitting in a room with those types of investments and you offer a low minimum like we do, at multiple options of how long they're going to get tied up, it opens people's eyes.
You said something a little earlier I want to touch on, because it sounds like it's a pain point some people were trying to solve there specifically. And you said that ours is short term compared to some of these long term ones. Yeah. So that's one pain point. People are looking for shorter term investments, obviously. What are some of the other pain points you think people were there to solve?
I think people were there to solve their issues in the stock market of unpredictability. I mean, we're not going to talk about all the factors in the market right now, or the globe, but then the fact that they can earn a fixed amount over a short period of time was more and more valuable as the event went on.
Throw you a curveball. Not sure if this was an occurrence there at the event, but was there any speculation or anybody consistently bringing up the election next week by chance?
Yes. And if anything, it was, hey, your program is great, but I want to wait a tiny bit. And I say, okay, we've been around 14 years. We have deals going on at any point in time. No rush. But guess what? This is what we do, and it has nothing to do with what's happening next week.
What are some other questions you were getting at the booth?
Ooh, number one was probably, do our rates change? Right? And we're happy to advertise that they don't, regardless of what the Fed. And the Fed's coming out with possibly another rate cut in 2 weeks. How's that going to affect you guys? And I said, people come to us, borrowers come to us for a specific reason.
Right.
And regardless of what rates are looking like elsewhere, we will have the deal flow.
Right.
Great thing for investors is we can be either that steady leg for a diverse portfolio or double-digit returns in a small portfolio. The gift that just keeps on giving.
So nobody batted an eye when you were talking about returns then with them?
They found it hard to believe. Because they're seeing all these different choices with different returns and different time periods.
Do you remember some of the rates you were seeing at the event by chance?
Yeah, and a lot of them, especially the variable rates, were going from 6 to 12%. So the high end is equal to our high end.
Low end seems a little bit
low end
much
seems
lower,
a little
actually,
lower, and those were the fun environments where you're closing your eyes, giving money, and hoping for a decent return. But the higher returns were definitely in the longer holds.
Gotcha. Any other questions stick out to you while you're at the event?
Not
a lot
really.
of the typical questions.
Yeah, a lot of the typical questions with emphasis on how we differentiate ourselves from the other real estate investments there, right? And a lot of it has to do with just short-term debt with a clear exit strategy. And I think in these uncertain times, that brought value to our case, I suppose.
Do you think people were pretty receptive then to the simplicity? I mean, it really is simple in that sense of things.
What was a little different for a lot of people was the fact that we fractionalized multiple investors in the first position. And that was pretty much the only idea all week that people were having to wrap their heads around. A lot of these alternative asset investors are familiar with real estate, are familiar with even note investing, but the fact that you can come in with such a minimum, get the same protection at $10,000 as you would in $1 million investment was pretty cool to them.
Well, that's a great segue. That was actually my next question is, when we attend these type of events, especially on the alternative side, do people understand real estate? Check mark that, okay? Now we have to really deep dive into it. What do they typically know? They understand REITs, they understand funds, they understand syndications. But when we say the word trust deeds or deed of trust, I always see it kind of like takes them a moment, and then we have to try to refer it to something else that they do know, like a performing note. What is a note? What is a performing note? But then when you get into the intricacies of like what you just said, how many people are on that note and how we fractionalize it, I think that's what makes them kind of, what do you mean? What do you mean? So how do you explain that to somebody when they don't know what the trust deed is? What's the most layman way that you can handle that?
The simplest way I put it for an experienced real estate investor is that it's a development loan with very clear exit strategies, and borrowers are coming to us because of the speed and efficiency we're able to fund their deal. And lastly, we're dealing with borrowers who are mid-sized with the capability to get out of this expensive debt within our contract terms.
Are they surprised at all when you do mention that all the different types of offerings we have, like from acquisition to development, like you mentioned, to construction? But then I think the one other thing too, I always see a lot of people really astonished by is when we say, oh yes, we do land, or we do big scale commercial property. How does that work?
Then they'd have to realize that we're lending on land with a specific objective of, say, multifamily homes or that healthcare facility.
Right.
We're not lending on land to bank for 5 or 10 years.
I think that's the biggest thing, though. I think that's something that they really don't understand.
Knowing that our borrowers only need us for a set period of time before they get their long-term financing or before they turn and burn the property, sell it off, and pay us back.
Yeah. Let's touch on one other thing really quick is how did it sound for deal flow though? And what I mean by that is were people necessarily not just looking for new investments, but having a hard time with who they're currently with? Did you happen to see any of that there?
Yeah, we had a couple of note investors that were doing it themselves.
Oh, wow.
Basically, showing off, for the lack of a better term, that they were getting 14, 15, 16% in their own deals.
Though, man? What
well,
risk?
even risk profiles, they'll say that these people have been borrowing from them for 5, 10 years. I'm like, that's amazing. But when I asked them that little curveball of, are there a lot of deals going on right now?
Yeah.
Are your borrowers doing a whole lot? And they're saying not as much. So they may come to us,
feeling on there. Okay.
and we advertise being that short-term option between your own big deals as well. So I mean, we're filling holes differently for different types of investors, and that's this being my first alternative asset summit.
Yeah.
It's interesting knowing that we can fit in people's portfolios so differently just based on the different things they're currently doing.
Where would you rank the average attendee for this event compared to all the other events that you have attended? We won't name all of them, but where would you say their experience level and their education level is in terms of trust deeds and alternatives compared to others?
I think what's great about all of Matt's events is that he brings his own following of complete newbies into the fold, but he also has that reputation of being such a good source for investment vehicles that we also get those savvier investors looking to get out of or add to whatever they're doing right now. So sorry to say it's a mixed bag, but it was a mixed bag, and I think that's extremely positive for, the mix of investments that were there as well.
So you're talking mainly, like, you're not talking about just the average cash investor. You were talking to either business owners, people who are looking to invest in maybe an alternate into the trust deeds we have, but specifically with the self-directed IRA. So like anything like as far as retirement funds as well.
Because it was well tied into Matt's IRA company, but it also stood as just a general alternative asset summit. There was that, again, mixed bag of just cash investors, business investors, and the retirement money investors. So I mean, if anything, this would probably be the most comfortable I've ever been, because people seem to be looking for our type of investment, which is always nice.
It's always good, having people at the booth. So one other question I was going to ask you is, did you see any clients there? Did you see any of our current clients?
I mean, without looking at my notes here, I can probably name 6. I mean, there was the usual Bill, there was Chad, there was Keith. I saw some of Kate's people, Carmen and Hendrik were there, and that's probably 5. But
it's always nice, right? Like, how does that make you feel when you do see the current clients there, even when they're not managed by you? You see Ignite funding clients in general.
Great segue, because I wanted to talk about their feedback on the other options.
Perfect.
Not only is it nice to see them, it's nice to pick their brains on what they think of the other opportunities. And these other opportunities are there because Matt trusts them as well. But then, just the transparency of every single day being exposed and the risks being known to you, but with the caveat of us knowing how to mitigate and deal with that risk.
Whole package,
is a little different from the other folks over there, whether it's hard times these days or just not as robust a foundation as us. Our clients do appreciate that openness to our history, basically not leaving a stone unturned.
I do really like that. I mean, I feel like I've seen you touch a lot more with the clients on the fact of, like, they're very open in the sense of telling you, hey, this is another investment opportunity. This is good, but here's what we don't like about it. And I'm not saying it's a perfect investment, but we do hit a lot of the nails on the coffin, if you want to say, for people to want to actually get in bed with us on this specific type of investment and try it out, get your feet wet. And I think that's the biggest difference between a lot of these other investments. You know, the lower entry to barrier, like you mentioned, the diversification on the investment, the types of ways you can invest. I think all that just culminates into one big snowball for us. And I think that is why clients do keep coming back. And then I think it's a huge thing that we don't really talk too much about is that us going to these events is very important because clients get to continue to see us. You know, that's how we bring our presence. It's not just the branding, it's how we engage with them. And I do get very excited when we do have the opportunity. So to hear when you came back, you were like, you know, I saw at least half a dozen clients. It's great. And then the feedback they give you is even better. You know, that's this is what I like to hear overall from an event. So who would you recommend to attend this type of event for an alternative asset summit? For those who've never been, if they're considering it, who would you recommend?
Retirement accounts obviously are a natural path to these investments, but for anyone looking for investment options outside of stocks, bonds, and mutual funds, Matt's Alternative Asset Summit is a great place to go, not to just get options, because these days you can get so many options online. You're going to Matt's Summit to get reputable options, people that he keeps within his own network, entrusting his own clients to invest in. And so you're getting great options with that level of trust that Matt brings into the fold. So I think if you're wanting that, come on over to the next one.
I'm going to leave you with this last question right here because I was actually really excited that you did get the opportunity to talk with them. I heard one of our borrowers was actually at the event. I would talk a little bit about that. How who was it? How close were you guys? And how did the event go between you guys? How did you guys utilize each other?
Well, Sedera Wealth, I now know how to say their name exactly how they want me to say it. So Sedera Wealth, you know, the Texas-based outfit that does multifamily turnkey solutions, was right across of us. Preston, the owner, Justin, the CEO, and a couple of their sales managers were there. So it was a great way to, number one, meet one of our borrowers. Number two, pick their brains on what they think about the current market, where they're at, and their plans for the future. We have Prez Enterprises and El Meadows out these days. Great options based on what I'm hearing from them. But really, what's valuable for someone coming in and seeing both sides of the deal is that they see a connection, right? We're not raising artificial money. They can see where their money is actually going. And because of that, we're bouncing off each other, really. I was saying, these guys are one of our borrowers. If you wanted to come with us on the development side and then
you can invest with them,
buy a couple of multifamily homes from them, well and good. And they are doing the same thing the other side.
Yeah, you play on both sides of it.
Because obviously you need higher minimums for their units as well. So if someone has $10,000, likes Lubbock, likes the multifamily developments,
they can get
come
involved.
to Ignite Funding, right? So it was a new dynamic we've never experienced before or haven't in a while. And if anything, they were great buddies at the end of the day.
Sounds like you got some really good talk time there. Sounds like the event overall, you know, we base events on different successes, obviously, but I think the biggest thing is like the engagement is important. Seeing a borrower there, that's huge. Seeing current clients there is huge. The networking opportunities, I will say these types of events, they're usually above par. They have great opportunities to network because that's the best thing for us. You don't want people just stuck in a classroom all day, back to back to back to back to back. That doesn't do anything for us. And I think Matt and his team do a great job of putting events like this together for companies like ours to be in front of potential investors and just plant the seed. I think that's what's really important.
I had my best conversations during lunch under the hot sun eating tacos. And
nice.
Yeah. I mean, we planned on sitting down for 5 minutes because it was so hot, but we ended up talking for 20. And just because very productive, and he attracts the right type of people as well.
Nice.
Yeah.
Well, Greg, I appreciate your time today here on Deeds in the Desert. That is our recap for this specific event, the Alternative Asset Summit, put on by Matt Sorensen. If you guys want to hear more about that event, go ahead and go on Google. I'm sure you guys will be able to find them, Instagram, and all their different socials. But back for our socials here on Deeds in the Desert, go check us out. See us on, we have Facebook, we have Twitter, we have LinkedIn, we have all the other different social media platforms. You'll see us on TikTok, YouTube Shorts. Specifically, that's Ignite Funding, but you can search for us on Deeds in the Desert. So next time you do see any of our episodes, make sure you like, comment, subscribe, share, do all that good stuff so that we can keep doing this fun entertainment educational series that we're doing here on Deeds in the Desert. Thank you for joining us. Thank you to all of our listeners. We'll catch you guys on the next one.
See you next time.
Thanks for joining us this week on Deeds in the Desert, where short-term investments meet long-term investors. We hope you enjoyed the content so much that you share it with all your friends. Who doesn't like learning about passive fixed income, right? Still hungry for more education? Visit our website at ignitefunding.com. Or if you're ready to take the leap and start investing, give us a call at 702-761-0000 and schedule a free investor consultation.